Hi, this is Randy Finney with the right side of the chart, and today is Friday, March 17th, 2017. And this video, I wanted to take a look at XLF, which was added as an official short trade today. Check out the notes on that chart. I'm sorry, the notes on that post, along with a couple of the charts that I included. We're looking at the daily chart here that was included in that post, as was a 60-minute chart. We'll just touch on that real quick. Since that post, we have gone on to break down. This is a support zone I was referring to. In fact, I need to label that there as such, so you can see a support zone that I was waiting to see go. Basically what we've had in the 60-minute time frame, we had a divergent high just as we did on the daily, and we had this ascending price channel. You can see these two lines are parallel lines, breakdown back test. This was a pretty significant support zone in my opinion, defined by this very large gap. That was a breakout to new highs. That gap was back tested, but the bulls couldn't hold it, and that's a bearish sign. So we've broken that support, and again, more importantly, you have these very powerful divergences on the daily chart. A couple things you can see an ascending, descending broadening wedge pattern we broke out of, but it didn't play out to its full extent. Instead, I think this larger pattern here, this bearish rising wedge, will come into play. I've gone over this chart. This is the measured target, which is just the widest part of the wedge added to where the wedge breaks down. You know, before it broke down just recently, today it looks like the breakdown is so far confirmed. It is options expiration, I'll say that. So for those of you that are a little leery to establish positions on OPEX, because there tends to be a little extra volatility in the market, you want to wait till next week, fine. Personally, I'm short the financials. I have been recently, and I added today, and that's the measured target. That's where we broke down, and it goes right to that target that I have. This is a long-term target, not the official target right now on the trade. For now, I'll see how things play out. I want to see the broad markets roll over. I would be nothing short of shocked to see the financials have a drop of what is that, 14 or so percent, 15% without the broad markets rolling over. So that's why that's the reason why at this time this is the final target down here. I don't have it marked up on this chart. It was on the 60 minutes. So take a look at that. And most importantly, I wanted to make the case that when I look at a sector, I want to make sure that the charts of the individual components, particularly if you have a sector with a bunch of top weighted components, in this case the financials, you do have a handful of mega cap, the world's largest financial companies such as Berkshire Hathaway, JPMorgan, Wells Fargo, Bank of America, Citigroup, Goldman. Here's my list, as a matter of fact. This is the components of the XLF, and what I've done is I've sorted those by market cap. You see this column here? I click on that, and we start out with Berkshire, $430 billion company, and you go down the line, JPMorgan, Wells Fargo. So I'm just going to go through a handful of these and make the case that these top-heavy mega cap financials, who undoubtedly lead the sector, if they go down, you're going to see just about all other financial stocks, the majority, drag down with them, meaning that XLF will play out. And of course, if you prefer to short individual companies, that's what this video is good for. You can take a look at these stocks as I go through them. I will go in order of market cap. Just click on my list and we'll go through these. And again, I'm not going to go through them all, just a handful, and make the case that the charts are in alignment. So here's Berkshire. Beautiful, very well-defined trend line. Look how many touches. I mean, this is almost artificial, the way it's walked up this trend line. But it's the real deal. This is technical analysis. There's that comparable gap to XLF that I just talked about. So Berkshire has yet to give way. And if and when that happens, that will greatly strengthen the case. In other words, an impulsive break and or daily close below this level, about 172.37, that will have taken out that gap. We're already down below the uptrend line / rising wedge pattern, so that in itself is a sell signal right there. Confirmed divergence, you can see it down below. We had an extreme overbought reading. I don't think Berkshire has ever been this overbought on the daily time frame, and probably in history. That was an RSI reading of, trying to grab it, 86.42. So an extremely overbought reading recently. And these would be targets. I can give it to you. You know what I'll do? To save time on the video, I have my lines marked up. If you're interested in shorting any of these individual names, just drop me a line in the trading room and I'll be glad to give you some price targets on the individual names. But there it is. There's the case for Berkshire. It's already broken down below that bearish rising wedge. Strong divergence is confirmed. Last time we had negative divergence on the daily time frame was back here. And that led for about a 5 or 6% drop. There it is, 5.5% drop. Just as we had bullish divergence down here at the lows, and that led to the rally that's taken us this far. So that's that. That's Berkshire, again, the largest by market cap. Here's JPMorgan Chase. Clean, very clean bearish rising wedge. It starts back here. You have several reactions. We've broken down. And again, just like XLF, here's that big gap right here. This gap is very important. There's a good chance that'll prove to be an exhaustion gap. You can look up that term. You have continuation gaps, breakaway gaps, and I believe this to probably be an exhaustion gap. We'll see. But you want to see a definitive break of this line right here, about 91. So move and close, especially close below 91, should easily open the door for a move down here to 87.40. To quantify that for you, if you want to trade a quick trade, that's a 4% drop. And I would prefer, my preferred target is down here about the 83.40 level, and that's about an 8.5% drop on JPMorgan. Wells Fargo, very similar story, a very steep, fairly well-defined uptrend line with a steep divergent high. Look how steep and strong these divergent highs are. And from my experience, the steeper the wedge and the more powerful the divergence is, the more impulsive the move down once these levels crack. So what I'm looking for is, again, this uppermost line is pretty key. Once that goes, I think you'll see a swift move down to at least those first targets. And again, if you want some numbers, I'd have to clean this chart up a little. I can give you targets on Wells Fargo for those interested in trading that stock individually. Here's Bank of America. Here's an uptrend line, this yellow uptrend line, which has now been broken. If we zoom in, you can see that. This one isn't super well defined. That's why I have it colored a little bit lighter shade of yellow here. Looks like an ascending, broadening wedge pattern. Certainly an uptrend to watch right here. And most importantly, we have a clear divergent high, negative divergence at the high. And that would be my minimum downside target, about 23.54 here. Let me do this so you can see the pop-up box. You can see the price all the way on the right-hand side towards the bottom, 23.54 on that level. And this one's about 21.90, and that would be my preferred target. And this is a thin zone. Just keep in mind, as I go through all of these, I haven't mentioned that yet, in XLF as well as all of these companies, this is the Trump pump right here. This is the rally that ensued after the election, and it's what I call a thin zone. I don't have the volume at price histogram turned up. It is on here. If you look closely, you can see some green and red bars, and this whole area is what I refer to as a thin zone. Very few trades occurred. Bank of America, as well as most of the financials, shot up, ramped up quickly immediately after the elections. And a thin zone is very comparable to a gap, if you will. So what my expectation would be, we move down, bounce somewhere along here, come down, and then we test that level. The bullish case will be that's the end of the correction in the financials, or at least in Bank of America in this case, and it very well may be. So if you're bullish on the financials, I know some are, you want to step in and buy there. However, be cautious. If we break and get into this gap, and you see especially XLF and a handful of these big names I'm talking about all do the same, a thin zone, just like a gap, once entered from above, is likely to be backfilled. So this would be my more bearish downside target, especially if the broad markets roll over and are in a confirmed downtrend at a time once the financials get here. But for now, let's just focus on these levels that I'm looking at for a decent pullback, ranging anywhere from 4 or 5 up to maybe 8 or 9%. Citigroup, bearish rising wedge. There was a minor trend line there. It broke, had a nice correction. But the bigger picture is this line here in this line. This is your uptrend line. This line just highlights the divergence. That's all that is. That's why you don't have to have a lot of reactions. I want to make that clear on these rising wedges, that this is a trend line. This is just showing divergence. In other words, price is making a higher high from the previous point back here, with the indicators, in this case the PPO, the MACD would look the same, and the RSI making lower highs. That's negative divergence. So your sell signal on Citigroup, we don't have that same as much of a big gap as the others do, but this would most certainly be, and if I don't have an alert, I'm going to set one now, that would be a sell signal for Citi that would bring it down. First target, minor support there. Pretty decent support here, so that's 55, 57, we'll call it 55, 60 would be my minimum target, and this is the, what I call if things get ugly target down here around 50, 25. A couple more and we'll wrap up, because again, I'm just trying to impress the point that the charts right now are in alignment with XLF, these individual components that is. There's your negative divergence. It's very steep, very powerful. A pretty well-defined trend line. Look at all the reactions back here. Found support again on it there. Found support recently. You can see it, and we've broken down. And it's not yet an impulsive sell-off, but it has the potential to be, especially after today. Today's OPEX. They're going to, they tend to hold the market up into OPEX, options expiration. And so the fireworks could start on the financials next week. Either way, it's a technical breakdown of a bearish rising wedge. That in itself was a sell signal back here. That stock has already dropped, several percentage points, 2.5 or so percentage points, just from the breakdown, probably down 3 or more from the top. There's GS, and I could add another target down here at this reaction low. That would be about 228.30 or so. USB, US Bank Corp. I don't know. Can't even say much more than that. That's just a clean, very clean bearish rising wedge confirmed with negative divergence. Again, a lot of the same as what we're seeing here. So there's a couple targets, near-term targets, initial minimum target. Here, I'll do this for you. 52.56. Again, these are not adjusted. $50, and then if things get ugly, we go down to the 46.13 level. So. We'll stop. We'll do 2 more. Morgan Stanley. That's, again, wow, look how many reactions on that uptrend line. You can count them back here. We had several right here, reaction there, and we're just now cracking below that trend line. Divergence is in place. On a scale 1 to 10, these are close to a 10. These bearish rising wedges are very clean. Everything's extended. We were extremely overbought, and from overbought, we just created a divergent high, and that's very common to have an overbought reading, and then we come back up again, we get close to or at overbought, but most importantly, it's in close proximity, and that gives you that negative divergence, which portends a likely trend reversal. So there's your minimum target right there, maybe a little reaction, but I wouldn't even consider covering if I was personally short this one until down here around 41.80 or so. AXP, American Express, and we'll wrap it up here. You guys get the picture. Negative divergence. This one has an ascending price channel, and we need to crack that channel. There's a little support just below it, about 77.86. And if that goes, sure, I could add some minor support levels in between here. And again, if you're interested, just let me know. Otherwise, if things get pretty ugly in the financials and they play out the way I think they might, then we come all the way down here. And that level's about just under 72 or so. Okay, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.